And I'm very excited to end the quarter with you guys. Today is not only the end of a great week, but also the end of the month, and it's also the end of the quarter. So today I will be speaking about 4 ways to bank points versus ticks. And obviously you guessed it, we're gonna be talking about futures, my favorite instrument to trade, to day trade that is, and also to swing trade. I'm going to be speaking about how we can make points versus ticks, especially when trading the New York trading sessions. I only trade for 2 hours a day. So I'm a professional independent trader, like Renee mentioned. I have been trading equities and futures for the last 15 years. So what that means is that I have been trading my own accounts for that period of time. Prior to becoming a professional independent trader, I come from a 10+ year investment banking experience in Europe. I'm also the founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the equities and the futures market. I'm also the designer of a proprietary trading system that is based on price support resistance. And when I'm speaking about price support resistance, I'm speaking about more than supply and demand, and I'm speaking about 7 layers of support resistance and key areas throughout the charts. I will be mentioning some of these key areas in here today, correlated with specific trigger times. And because I focus on the New York trading session, I focus only on 3 major trigger times that occur between 9 o'clock and 11 o'clock Eastern time. I also take a close look at the specific price zones in which the indices or commodities are trading. Also, I'm very keen on chart synchronicity and divergence. In fact, today we will be speaking a little bit about synchronicity and divergence and a trade that I have executed today live in the trading room. And I also have a strict set of trading rules and a 10-point scoring system that enables myself to this very day, after 20+ years of trading, to identify trades with ease, calculate risk for a better return. So in other words, getting the best buck for our risk. All right, if you guys wish to contact us or visit our website, it is TradeOutLoud.com to find out more about our education and our products. You can feel free to also call us, this is the phone number right here, or email us with any trading related question or any question that you may have from today's presentation. You can follow us on social media and on our Facebook page, facebook.com/TradeOutLoud. And actually, if you're interested in a lot of trading ideas that we post, a lot of market commentary, you can definitely follow us on Twitter. It is twitter.com/TradeOutLoud. Also on YouTube, we do have some videos available, and on LinkedIn, you can also view some of the articles that I have been featured in. All right, here's our agenda for today. First of all, why the New York trading session? So why am I so focused on only trading the first 2 hours of the day? Then learn how to use the overnight price action to your advantage and the preparation work that goes before the market even opens. So at the open, I know exactly what I need to do in order to execute my trade. So it's not going to be any type of analysis, anything. I'm just going to let my plan fall into place at the open. Then simple indicators that predict price flow and generate at least 10 to 20 points. Scanning for the best odds trade. And even though we're trading futures, we don't have a lot of markets to trade, but for the markets that I trade, I'm going to show you how I select what to trade. Knowing when to stay in the trade and knowing when to take profit. This is a very big issue for a lot of traders that are leaving money on the table. And I'm also going to be touching base here on the difference between small accounts and larger accounts and how you need to trail these positions, because not all accounts are created equal. And if you have a smaller account, you definitely need to grow your account, and you need to play it more safe than you would have a larger account. All right, so if that doesn't make sense now, it'll make sense a little bit later on. Okay, so today, like I've mentioned before, is the last day of the week, the month, and the quarter. And for many traders, this might not mean much. This may mean that, okay, you know what, it's Easter right around the corner, we're having a long weekend. So for many traders, it's just seen as a long weekend. But for the very few astute traders, this day has a different significance. First of all, evaluating your portfolio. How did you perform within this quarter? How was your first month? How was your second month? And how was your third month of the quarter? And how were your results at the end of this quarter? The homework that you did, the trades that you have executed, how did this fall into plan, and how did the market reward you? We are ending right now a very tough period, that a lot of accounts were killed. A lot of traders lost a lot of money with this market volatility. Now, some traders use the market volatility as a great sign because you could actually execute and have a lot of winning trades based on this volatility, or this volatility can turn dramatically against you. We will be talking about a little bit later on. Also, the beginning of the new quarter, right? So the end of the quarter means the beginning of the new quarter. What does the new quarter bring us? Well, it brings a new earnings season in just a few weeks, just a couple of weeks from now, right? And that means more opportunities, because this is what makes the market tick. Not only news related, but also stock fundamentals, right? This is what creates this buying pressure or selling pressure in the market. And last but not least, it creates new technical opportunities for the week and the month ahead. And so far, today's price action is conducive of the beginning of a really nice move for our indices, because we're talking about futures. I'm not going to be talking about stocks today, but a very nice move into next week. So very nice. Depending on how the market is going to close today, it is going to be setting up for a really pretty trading environment next week, coming next Monday. I just want to share with you our portfolio evaluation here at TradeOutLoud, and these are the results from trading only 2 hours per day, from 9 o'clock, or basically from 9:30 when the market opens until 11 o'clock. So these are the results based on only one contract per trade. Minimum requirement is to have a $10,000 account. And why is that? Well, because the margin requirements for the indices have been growing, right? There are 6,000, 7,000 right now margin requirements. Russell is the only one that it has plateaued around 3,500, right? But the rest of the mini indices require more margin. Okay, so therefore last year we had a 2017 $5,000 account challenge where the mini indices were the margin requirement was below $5,000 or $5,000, and we have the results actually posted on our website. You can log into tradeoutloud.com/performance, and you can view the full performance of our 2017 $5,000 account challenge, which is outstanding. And all those trades were publicly communicated with entries, with stop. We still have a full record, and you could see the good, the bad, and the ugly right there. You could see the stops, you could see the winning trades, and ample explanation of how those trades worked right there. So we have nothing to hide. Also, this quarter has been one of the strongest quarter in a very long time. We have been having very strong positive results every single quarter since we have started in 2011 with our education and our services. And I could tell you right off the bat that this quarter has been totally outstanding compared to anything that we have reported so far. So January, $6,200 based on a $10,000 account. So if you had a $10,000 account, your profit would be $6,200. February, $2,536, and February was the most volatile month. March, topping off the best month of this quarter. Today, we actually took profits on 2 trades and lifted this amount to $6,537.50. So if you have a small account, everybody's different. Not everybody has a $200,000 to $300,000 account, and a lot of traders have smaller types of accounts. So if you have a $10,000 account minimum, and this is what we recommend when trading, and if you should decide to trade with us along the lines, so for a $50,000 account, your profit would be $76,000, a little bit over $76,000. So you could see that beautiful, beautiful, beautiful results. And this is our method. This is what we teach, and this is where our students implement. So we do have a special. It is a spring sale. You guys here are the first ones to take advantage of this sale. It hasn't even gone public yet. We are offering a 1-month trial for only $99 for the first month. That is 50% off the regular subscription price. And by the way, this subscription price of $199 is going to go up. So everybody that is locked into this price will benefit from this price moving forward. We're definitely going to be lifting the price a little higher. There's a tremendous amount of work that we're doing in the trading room. There's a tremendous amount of education that we provide with technical levels and everything else that is associated with charts. And think about this $99. What is $99? It's literally 2 points in the E-mini S&Ps, right? And we're banking, and today we are here to talk about how you are going to bank points and not ticks. Obviously, everything comes to an end, and the offer will end on April 3rd. If you want to take advantage of this offer, TradeOutLoud.com/spring. This is a trade that we have just closed today, and we've closed it at 146.13 for $1,000. You could see it right here. You could see the date, and we just closed it. We had an offer out. The trade actually went, and this is the 30-year bond. Trade actually is trading right now at 146.21. We took profit at 13. We closed the quarter on this one. And also, we did have one day trade this morning. We don't take a lot of trades, between 1 and 3 trades a day. And we have banked $444 per contract. And by the way, guys, these are real results from a real portfolio. And not only that, but I trade live with you. So you're not going to see a simulated account. You're always going to see my orders. You're also always going to see my results. And I trade 2 accounts at the same time. I trade a larger account and I trade a small account for example purpose. And this is a small account the small account for example purpose, where I trade 1 contract. So everybody can relate, and the results on the portfolio represent precise, exact amounts that were earned by trading with one account. So we put our money literally where our mouth is. All right, the beginning of a new quarter means what? Earnings season. So we're ready to capitalize on earnings season. And why is earnings season so important for the indice market? Well, because it makes it tick. You're going to see price that accelerates, and you're going to see fluctuations in price, and definitely stocks are going to be the major driver for, at least for the beginning of earnings season. And stocks are big components of indices, right? So you have heavy stocks that are doing the heavy lifting in the indices. So what that means is that if you have, let's say, Apple that is reporting earnings, if you have stocks like Netflix or Facebook that is reporting earnings, and if those earnings, depending on how those earnings are, right, all these are NASDAQ stocks. So if you're getting a big push within these stocks, pre-market or after-market, depending when they report the earnings, definitely you are going to have a pretty much expected move into NASDAQ. So depending on how these numbers are, our indices are going to react. Now, let's remember that when we begin earnings season, the financials are going to be the first ones that are going to report, with JP Morgan, Wells Fargo, etc. So these are big components of the S&P 500. So we're going to see the first reaction in the S&P 500, because when you're talking about indices, they're not created equal. And therefore, you have to know what to look for when you're getting into a trade. So definitely, first and foremost, our focus for the beginning of the quarter is going to be what? The S&P, right? Because the S&P has the tendency to run faster, higher compared to the rest of the indices. So these big components represent big moves in one or more indices, and these literally represent easy money. Like I mentioned before, let's take a look at these indices that we're trading in futures. And my focus is on indices. I mean, these are my income producers for the day-to-day, for month-to-month, from quarter-to-quarter. So when we look at the E-mini Dow, we do look at the Dow components. And for instance, if I have earnings that are coming out, and there are earnings that are coming out of Boeing, or earnings that are coming out of Microsoft, or earnings that are coming out of Disney, definitely we can expect a move higher in the Dow, whether it's happening before the market open or before the market closes. Same for the S&P, same for NASDAQ. Like I mentioned before, you have big move in Microsoft, let's say you in Google, etc., or Amazon. NASDAQ is going to react, and it's going to produce that relative strength or weakness compared to the rest of the indices. So definitely NASDAQ is going to be a leader for that day when these indices, when these stocks will be reporting. Russell, absolutely the same. Let me show you an example so you can understand it much better. This is NASDAQ right here. So this chart at the bottom right here, at the bottom right, is NASDAQ futures. Now take a look at what happened here. So literally this index was basing. All of a sudden was retesting support level. So it went in and out right here based on what? Based on Google, Amazon, and Microsoft reporting earnings. So Google, Amazon, and Microsoft reported earnings after the market closed. The gray highlighted area represents the overnight trading session, and the white area represents a New York trading session. So we had a big blast in Google, big blast in Amazon, and big blast in Microsoft. So guess what? This little setup right here that is developing, and these are hourly charts, by the way. Look at this beautiful risk to reward trade here. Look at the entry. This is a great first target area. We're going to be talking about these moving averages and what moving averages I use. And then basing throughout the overnight trading session, and then towards the open, towards the pre-market open, 7 o'clock, then we're getting a real dynamic move to the upside. I just want to do a quick sound check. I have something that just popped up on my screen right now, and I'm having connection issues. I hope that everything is okay. Okay, so we had a big explosive move, and these are the moves that you have to capitalize. So don't focus on a day-to-day level to make just one tick or two ticks or three ticks. There's so many traders that come to me and say, you know what, I've done 3 ticks, or I've made 6 ticks in the mini S&P. It's like, don't waste your time and don't waste your money. If you know technical analysis, if you're an educated trader, then you have to apply what you have learned to your charts in order to maximize your gains. Use your time efficiently. And this is the only way you can use your time efficiently, by doing the study that requires before earnings season even starts, okay? Now, we got to move along. Technical opportunities arise at the end of each week, and more so at the end of each month, because we're just closing. We're closing the month of March. We're closing this week. We have new key levels that we have to watch for on the weekly charts and also on the monthly charts, depending on where price is trading in relation to the prior week's high and low. Depending to the location, whether it is trading on support or whether it is trading towards resistance, will give us a gauge as to where the market may follow through within the next week. These are very important triggers. Now, these are not specifically for swing trading. In fact, this analysis that is done on these major time frames literally translates to small time frames, such as the 1 and the 2 minute charts. Your homework needs to be performed on your analytical time frames and then transfer to your small time frames, and that's how you bank points versus ticks. So don't waste your time going for little ticks and be scared, not knowing for sure where your stop is going to be or where your target is going to be. When you have small stops based on a 1 minute chart or a 2 minute chart, you have to know exactly that those stops are sustainable based on some very strong analytical time frames. Other than that, those stops are not going to work and more stop outs will occur. So you're going to incur more losses and your wins are going to be very small, because as the trade is going to move higher, you're going to be so scared, and then you're going to close the trade very, very early. You're not going to be staying in that trade. One of the reasons why a lot of traders gravitate towards the futures market, and by the way, right now we're just breaking out in these minis right here. So smaller, and that's the trader in me, like the total addict. Okay, so smaller account size, you only need a startup cost of minimum $5,000. But what I do want to mention is that yes, you could trade with $5,000, but I don't like to trade on margin. The other thing is that you can trade some commodities that have less of a margin requirement. I, however, would recommend a trader to at least have a $10,000+ account in order to trade futures in this market. And this is way better than day trading stocks, where the minimum requirement is $25,000, right? And you know what happens, that if you lose about 5 cents in that account, your day trading status is pretty much done at that point, and you are not going to day trade anymore. So you need to have at least $30,000 in that account. You have the opportunity to grow a small account way faster. And take a look at the 2017 results. We've traded with a $5,000 account. Definitely, I have traded, so those are my results that are right there. So you have to know exactly what you're doing whenever you're trading, right? Because if you have the funds, why waste them out the window? Keep in mind that when you're trading against hedge funds, right? The hedge fund can be either your partner or it can be your worst enemy, right? Portfolio managers, you have institutional traders, you have algorithms. So take a step back and think, am I educated enough to trade with these guys, or are these guys going to wipe me out, right? Because the latter scenario is more likely going to happen. Also, trade earnings via E-mini futures. If you don't have, let's say, a $100,000, $200,000 account where you could trade Amazon, where you could trade Google, where you could trade all these high price line, etc. You could trade all these high price stocks. Guess what? You can trade them via futures. And I just showed you the example. You can day trade and swing trade around the global clock. What that means is that the futures market is open close to 24 hours a day. You can hedge positions. So for instance, if you're in your account, I don't know, if you're long some stocks, and if you're a swing trader, you can hedge the VIX with VIX futures. So there are several opportunities that you can use the futures account for. For small position, you get great great returns on very small position moves. And I had a webinar about 2 weeks ago where I showed this example of how you can benefit from these small moves you can make. So so I timed a 20-minute time frame, and within this 20-minute time frame, the stock, basically the Qs that I was trading, and I took a trade in the Qs and I took a trade in NASDAQ, and I made 10 times more in NASDAQ in the same amount of time, using the same entry, the same parameters, the same key analysis, than trading the stock, the ETF, I'm sorry, so the shares per se. Also, you get greater leverage. You have a minimal watch list that it keeps you very focused. You take a short position on with these. You don't have the uptick rule, or you don't have to pay attention to read your platform and find out it's not easy to borrow or whether it's easy to borrow. Much better commissions, and they're working on reducing the commissions for futures even more. The brokers are working on that. You don't need a scanner, so that's a great advantage. I, however, use a scanner because I'm a swing trader as well. So I day trade during the morning, the first 2 hours, and the rest of the day I swing trade stocks because I love swing trading stocks. But I do use the scanner, and that is another $200 a month expense. But if you're only a futures trader, then the better it is because you don't acquire that that expense. You don't need any special indicators. In fact, in here today, I will speak about some indicators that I use. Tax advantage 60/40 rule for the US simplified reporting at the end of the year. Guess what? You get a 1099-B form, you file it with your taxes, and you're done. So you have a savings too when it comes to taxes. The time flexibility, like I mentioned, 24-hour market. And guess what? Now you can trade Bitcoin. If this is something that you are looking forward to, basically you can trade Bitcoin right now. Let's talk about why trade futures again in the New York trading session. So first of all, the volatility. Price moves vigorously. And unpredictably, I used quote here because if you look at technical levels, it's kind of predictable. So it's 80% predictable. Volume, you have a lot of volume participation, and that is because you're trading the sweet spot between 9:30 to 11 o'clock. You have the overlap of the European session with the New York trading session. What can you trade when you're trading futures? You trade the indices, and this is my focus. I trade the mini Dow, S&P, NASDAQ, and Russell. These are my absolute favorite and to go to every single day. I also trade crude oil and gold, and I also swing trade the rest. So for the rest, and bonds, sometimes I day trade, very, very seldom, but I do when there are some great opportunities. But the rest of the symbols on this chart are mainly used for swing trading. So using the overnight price action to your advantage, how can you use that? Well, futures market offers you the great advantage to see a continuous price action. And what that means is that you're able to see how the Asian session is handling the price, how the European session is handling the price, whether they're taking it higher or lower, or whether they're ranging it. These are the charts from last night. These are the support levels that are being set, and let's just get the point right. This is the support level that was being set yesterday in the overnight trading session and also into the New York trading session. And any break, you could use these levels right here to identify potential breakout zones or continuations or pullback buy areas, depending on the case. So take a look at this example right here. So you had an ascending move, topped into the 50 SMA, pulled back. We're going to be talking about these key moving averages in just a little bit. And you're having a pullback buy here, beautiful off the 200, off the 20 SMA, move higher, breaking above the prior high, heading into the next area of minor resistance. So it's definitely really predictable on what in terms of what price action is likely going to do. So the first thing that you need to do is to determine where the price is trading in relation to what. Determine where the price is trading in relation to support resistance, to the trend lines, to the moving averages, and to the fibs. And also pay strict attention to chart correlation, whether the chart are divergent or they're in synchronized mode. The New York trading session has the upper hand at the open, because like I mentioned before, you have the past price action that is giving you a clue of what's likely to happen in the New York trading session. So your homework, your pre-plan and pre-market game plan before the open is going to kick in. So trade the open, and literally you're going to be done in 2 hours. But there's a little bit of homework that, literally, you could do it about 30 to 45 minutes before the market opens, but it really pays well. Because if you're coming unprepared, and if you're just turning on your computer at 9:20 and say, okay, what am I going to trade? I'm just going to look at the charts at the open and see what sets up. You're losing valuable time, where all these astute traders are getting in where you're just starting to look. So the markets are very, very fast paced in the morning. Only 6 charts, and these are my money makers. Like I mentioned before, the Dow, the S&P, NASDAQ, Russell, gold, and oil. It's hard to miss a setup and focus when you only watch 6 charts in the first 2 hours of the trading day. So literally, it's very hard for you to miss a trade. You're super focused on that specific time frame. And there's a time when you have to draw a line. You know, like if you're going to trade all day, and I have been trading for many, many years, the whole entire day, you're going to burn out. So be focused. Select a time frame, whether it is in the morning or whether it is at night or whether it is from, let's say, 2 o'clock to 4 o'clock. I've been talking about the simple indicators that predict price flow. The one indicator that I absolutely love, and in fact, is the moving averages. The 20, the 50, the 200 SMA, and the 10 EMA. These are the moving averages that I use. These are the moving averages that I used yesterday for a late day trade. Take a look right here, okay? Take a look right here. We have the pullback right into the 200 moving average. But did I take the trade with this risk right here? No, I zoomed because this is a 1 hour chart, and I wasn't taking it for a swing trade. I was taking it for a day trade. So I looked at the 15-minute chart. I looked at the reversal. I looked to see how it can handle the 200 moving average, and I entered long at $64.20. I had a stop at $64, and that is a 20-cent. I'm sorry, this is a mistake right here. It's a 20-cent risk, which is $200 per contract. The profit, it ran into, I don't know if I can move it right here, but the profit was at 64.70. It ran into, I don't have pre-market data here on this chart, but it ran into this chart right here. I took profit at $64.70. That's $500 per contract. And if you have a $10,000 account, that is $15,000 profit on one trade. So if you haven't traded, let's say the open, if you would have traded the afternoon trading session, this is what you needed to look for. So today, the moving averages have helped me determine the entry in Russell, right? So we have the pullback buy in Russell at the cross of the 20 and the 200 right here. And the blue is the 20, the green is the 50, the red is the 200, and the pink one is the 10 EMA. So trend lines are very helpful because they determine whether you know, you're going to expect selling pressure, or a snap above means that you know, traders are ready to buy it up again and to push the price a little higher. Definitely support resistance, the way it is represented here, the green and the red, break above 24. And once again, when we speak about support resistance, take a look at support resistance in the context of the trend, right? Because if you just break it up on a 15-minute chart or a 5-minute chart, it's not going to tell you much. But guess what? You know, let's think about it. Are we right now into an uptrend or a downtrend? Is this market in an uptrend or a downtrend? I'm going to answer that question for you. The market is still into an uptrend. The weekly chart and the monthly chart have done nothing to break the trend. So we're into a very established bullish trend, and we can always expect to buy. In fact, I've only had 2 or 3 short positions on within that volatility for the month of February. And the rest, I was long. Every single trade that I took was long. Today, the trade that I took was long. Another simple indicator that you use to predict support levels and further targets is Fibonacci's, and this is definitely what I use. Also today, based on my decision today, I even posted on Twitter. So if you follow me on Twitter, twitter.com/TradeOutLoud, I always post my trade ideas there. This is something that I take very, very seriously: chart synchronicity and divergence. And when we came into the trading session today, we did have a very strong NASDAQ, and we did have normal price action reaction in YM, ES, and Russell. We didn't have a strong divergence, but we did have a pretty synchronized movement in price. But we did notice that we do have a relative strength NASDAQ coming from the overnight trading session. But guess what? Once we opened, take a look at what happened. 1-2 bars to the downside, and these are 2-minute bars down to the downside, while Russell was still basing right here. Okay, while Russell was still basing. So Russell was the strongest index. That's the reason why we selected it. So find the trade, and this is the scanning process. So first of all, you have to pay attention to synchronicity and divergency, right? See what's leading and see what's lagging. You're going to go with the strongest index for long, and the weakest index in case the market reverses. You're going to look at that weak index for a possible short. So you're going to evaluate the trend, you're going to evaluate the price, location, the risk, and the potential reward. So these are the 6 major elements that you need to look for before you even take the trade. And what to look for in a sideways market, definitely you can scalp. Okay, definitely you can scalp within the trend. In a trending market, you're going to be playing the trend. So option 1 is that at a reversal key level, right? Option 1 is that you need to take it at a key reversal level and out at the next reversal. So you're buying the low, let's say in an uptrend, you're buying the low, right? You're buying the reversal at the low with confirmation. You're letting your index or commodity or even stock, whatever you're trading, go up, right? And this is in a scalping mode. And when you're getting a quick reversal based on that time frame move, you're going to exit the trade. And option number 2, you're going to stay in and let your trailing process take place. Okay. And in fact, this was one of the trades today. Is this good for a trade? Is this a scalping trade, or is this a trending trade? Well, first of all, let's take a look at the daily chart right here. We have a pullback and buy right here. Once this triggered above the prior daily high, zoom, I was in the trade. Okay, and then moved higher. We took at the first reversal side, and we took profits right here because, hey, you know what? We're just trading the first 2 hours in the morning, and we don't want to feel like trailing the whole rest of the day. We made our money and done. So we picked, we actually exited at 15.35 right here. But this may develop as a trend, okay? So in case you're trend trailing, you have to place your stop below these pivots here, or at least in this scenario, above these prior highs that was set at the New York trading session. Same thing with oil here, and this was a perfect example from this week. It was, I'm sorry, for gold. It was topping up this week, down, sideways, down, right? So when you have something that it starts to trend, you have to trade it in the direction of the trend. So any kind of pullback, you sell. Any kind of range, you sell. Any kind of pullback within the range, you sell for maximum profits. Now, knowing the market timing and how it works. Now, everybody knows the market opens at 9:30. At 9:32 and 9:35, you have the first market calibration. Then you have the 9:45, which is the trigger time. It's exactly when we initiated the trade. At 10 o'clock, we have reversal time. And in fact, that is when these indices started to move today. At 10:30, if you have a strong trigger time at 9:45, they tend to blast through 10 o'clock. And they move through 10:30 into 11 o'clock. But 11 o'clock, 11 to 11:30, most of the European market closes, and then you're going to see a drop in volume, and that also marks the beginning of the doldrum period. So sideways price action, you can expect that. That's the reason why I like to trade the morning. So let's get technical. Multi-time frame alignment is very important for your day-to-day trading if you want to have high odds trades. Don't focus, don't put blinders on when it's coming, when it comes to trading time frames. First of all, there's no trading off a laptop here, okay? You need to have real estate, and what I mean by that is you need to have multiple screens in order to identify that. 2 or 3, absolute requirement. Invest in your business. Don't get greedy on your business. You have to invest in your business in order to have the best layout, the best computer, the fast response monitor, etc. Analytical time frames. For day trading, I use the hourly charts and definitely all of the major time frames as well. In order to trade what? The 1 minute and the 2 minute. And I sometimes trade the tick chart, okay? So all these things that I'm mentioning to you here today, I'm mentioning every single day, but even more into the trading room. So these are some results from the trading room. You can see, and these are my results, not trading with one contract. Like I mentioned before, I trade 2 accounts, real time in front of everybody. So these are some of my results. I'm just going to browse very quickly through them. And this is the method that I teach. And also this is the method that we trade into the trading room. You can see $1,400 here, $7,400 here. Take a look at this beautiful price pattern. We have the patience to wait until when? 11 o'clock. And sometimes I take my trades beyond 11 o'clock and alert my members about these trades, and if we're in these trades, they know what to do. So we set our entries, we set our stops, and what's beautiful about the method is that there's nothing rushed, everything is calm. We place limit orders, so there's no buying now, no selling now, nothing that is aggressive. All right, we spoke about the Trade Out Loud trading room. If you're interested, TradeOutLoud.com/spring. These are some more examples done by 10 o'clock. So we're done, right? We started at 9 o'clock, we're wrapped up by 10 o'clock. Do you need to stay in front of the computer more than that? I would say not. Okay, these are some other trades that were active. Again, oil right here, and take a look at this. This is with one contract right here, $1,400. In fact, this is a swing trade, 14,000 in natural gas. And by the way, guys, natural gas and copper setting up for some big, humongous bucks going into next week. So it's a perfect time to analyze those charts. Just a heads up. NASDAQ, $1,500 right here. Russell, 1425. And sometimes you have opportunities that are coming into the evening. So don't neglect trading the evening as well. Here's a perfect example of how we trail our stops, where we place our stops. Everything is very, very transparent. Take a look at the time frame at 11 o'clock, All right, so a ZM right here, this was also a trade. So our trading system is based on price support resistance, trigger time, specific price locations, chart synchronicity and divergence, and our set of rules. It is literally an institutional grade trading system. Well, what I mean by that is that I took the model from proprietary institutional traders and I have adapted it for the retail trader. Why? So I can trade it. So I designed it for myself first and foremost. We have a trading class that will begin in 3 weeks from now, where we teach the most powerful day trading chart patterns and how to exploit them for above average gains. We teach the 6 major disciplines of the trade, which is the entry, stop, target, trade management, position sizing, and trailing. And we teach you how to calculate these and how to define these, so for maximum odds trades. Also, how to maximize your timing using key moving averages and other powerful indicators that were not presented here. How to maximize gains and minimize losses using what? Proper money management techniques. Also, the market timing. We teach you the tempo of the market, those trigger times, so you know when to get in with confidence, you know when to sit on your hands when the time is not right for the market to run in one direction or the other, because you don't want to get into a trade when the market is timed to pull back. Okay, so we teach you exactly how to do that. We teach precise locations, advanced technical analysis skills, and so much more. If you're interested in this class, it is a 35-day boot camp, and this class is live online April 23rd through the 27th. It is taught every day for 5 days from 6 o'clock to 8 p.m. Eastern time, and this is the training part. It is literally a very fast-paced, intense class. You could ask multiple questions, etc. April 30th through May 30th. Sorry, there's a mistake here. To May 30th, it is 1 month from 9 o'clock to 11 o'clock live trading. And if you want to find out more about this class, it is at TradeOutLoud.com/futures. The class tuition is $4,995. You can see our quarterly results. So this is something for very serious traders as well as the trading room. So if you want to join, you can email us at info@TradeOutLoud.com, or you can call us at the phone number listed here. We also have some payment plans available. And if you have any questions, let me know. Or definitely make sure that you email us with any questions that you may have. So thank you so much.